quick one. I would like your thoughts on something. I was reading a quote by Warren Buffett, who is considered one of the most successful investors in the world today. And he said, if you don't find a way to make money while you sleep, you will work until you die. I found that quite profound. And one of the things that COVID-19 showed us is the financial deficiency of many. And yet Kenyans are known to be big investors. Are we then investing in the wrong investment vehicles? Would you say so?
I think we are not investing in the wrong investment vehicles. The problem is we are not diversifying our investments, because I believe in order to diversify risk, an investor should invest in different asset classes. So maybe real estate, the money markets, the government securities, and equities. So someone should be able to diversify their risk so that when something happens to one of the asset classes, or when they make loss in one asset classes, the other of the asset classes can be able to cover that.
Exchange. So different people like investing differently. For example, I think Emanuela mentioned about Warren Buffett. He's a contrarian investor, which is at this last part. A contrarian is one person who buys when the market is doing the opposite. So when, for example, right now stocks are definitely going down, so we'll find Warren Buffett buying stocks now because the prices will be low. So you'll find that in the stock market, it's like the law of economics, demand and supply. So when there's a lot of demand, the price goes up. As people are buying Safaricom more and more and more, that means the price will go up. So at that point, someone like Warren Buffett, who is a contrarian investor, will sell because the price is high. But when the price is going down, like now, people are selling because they're scared of losing their money in the equities. You'll find him buying at very affordable prices. Then, okay, we can go look at the dividend growth investing. So you want to know also, are you targeting to get dividends? Some companies give dividends, some do not, and the dividend rates are usually different. So you'll find that a company like Safaricom gives like 1 shilling 40 cents. That's what they gave last year per share. And others like BAT, ABL give a lot of dividends. You'll find dividend is over 20 shillings for BAT. So you need to identify, is that my strategy? Is that what I want? Do I want income per year, or I want capital gains? Capital gains is where, as Susan mentioned, it's where now the price goes up or down. That's capital gains, and there's dividend growth also. So you'll find like dividends are usually high in companies that are value stocks. So there are stocks that are value stocks and there are growth stocks, which is also here. So a value stock is a company like that has been there for a long time, that has been listed for a long time. For example, BAT again and EABL. So they've been listed for quite a while, and their opportunities for growth are not as high as the banking sector and Safaricom. So a growth stock is like Safaricom and a value stock is like BAT. So you need to identify, do I want to invest in a value stock or a growth stock? A growth stock will give you capital gains because you're expecting Safaricom will continue coming up with solutions that will make the stocks go higher and higher because of profitability. So you'll find that with capital gains, you can invest in Safaricom. Then there is passive and active strategies. This is whereby you need to know, do I have the time to really go in and look at the stocks in detail? Am I able to look at Safaricom and really know it's going to go down or go up? So that you're able to identify, am I a passive or an active investor? So for a passive investor, you'll basically just invest in a share and maybe wait for it to just gain, or you'll come to analysts or traders in the stockbrokers and find out which stock is good for me to buy. In an active strategy, you have to you have to be able to do the analysis yourself. There are various things that affect the stock prices, for example, profitability, management, which I will discuss much later. So there's also now income investing, which is basically the same as dividend investing, where you just want to get your income every year. You want every half year. Some of them give dividends, interim dividends after 6 months, and the final dividend at the end of the year. So if you want to get dividends at every 6 months after the company gives when the company is giving the half-year results or full-year results. So do you want that, or you just want to gain the return on capital?